in the end, you just have to trade it live, whether you trade it on a demo or a live account or whatever. In the end, you still have to do it to see how it's going to go.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I've been looking at some of those MT4 and MT5 EAs in the store, and I was wanting to get your thoughts on if you've experimented with that. What do you think about it? Do you think that a lot of them work, a lot of them don't work? And what are the common issues with those EAs? What do you think?
Yeah, so that's a good question. I haven't really looked at them. So years ago, for people that don't know, like 16 years ago, the trading robots were like a big deal in Forex. And that's, I think, where most of it seemed like, I don't know, maybe I'm wrong, but it seemed like a lot of the focus was on those in trading. And that's when I first put a website out and just put my account statement and put a website out and a little blog. That's when I first kind of got into that, because my broker was asking me to do webinars. So I said, well, might as well have an online web page or something, you know what I mean? And so I remember back then that was, and I did look into them then, and they seemed really scammy. But I would just say, I'm not saying that they are, because I think there are certainly methods that can work. However, they're probably not the type of methods that are most popular with people who are interested in trading robots. And here's what I would say about the normal pitfalls with automated trading in general. So what I do with my trading is I'll automate my exits, and I have those programmed. So I'll hire someone to program the exit, and that's it. So I think all about the entry, I manage the trade, and then I decide when to flip on the trailing exits, right? So that's how I do it. So it's semi-automated. And I find that to be for me, it's very useful, because I don't have to think once I'm in the trade. Well, it depends on if there's a break-even rule or something like that, because I don't necessarily automate those, right? Although it is possible. So what I have found, and this is really more of a statistical thing, is, and if you read, I've read a lot of the automation books from people that are into automations. I've listened to the interviews and things like that. And it's pretty common that, it's pretty well accepted that one of the big things with automated trading is curve fitting. What I mean by that is you can get a system to work really, really well on historical data, but as soon as you take it forward, it collapses. And so there's a schism in the automation or robot traders, or whatever we call it, systematic traders, sometimes they're called, in how to deal with that, right? So that's kind of the big question in automated trading is, we know that if you have too many variables with too many possible elements, so think like a moving average, right? Or a MACD with the settings, or an RSI, or anything like any sort of standard indicator has a variety of settings you could use. So whenever you start to go down that path and you start using those sorts of things as the inputs, you can really fine tune them. And the fine tuning means that it can easily curve fit. So a lot of these guys are discussing, how do we deal with this issue? So there's walk forward testing, there's in sample data, out of sample data. There's all these different ways for them to actually verify that the system works, right? In the end, you just have to trade it live, whether you trade it on a demo or a live account or whatever. In the end, you still have to do it to see how it's going to go. And so what I would say about that is, if you want to get into this sort of thing, you really need to read up on how you are going to verify it, because there's a lot of, I see the same things you do when I log in MT4, like the little thing at the bottom that says, hey, there's a new breakout fantastic EA number 5 or whatever, you know what I mean? I see all that stuff in the store too, but I haven't really looked at it. I just don't. But I'm not saying, I think that it's possible that there are really good automated strategies out there, but they're super simple. They don't have MACDs and moving averages necessarily, although those could work too. What they usually are, and if you look at the artificial intelligence ones, or the ones that are based on where you give the program a bunch of data and you say, make me a system. It's really interesting what they come up with, because it doesn't make logical sense. You will find that if you do that with certain systems where you basically put the data and you give it lots of data and you say, you tell me what the best system is, computer, right? And it spits out, it's not really artificial intelligence, but it's expert systems or that sort of thing. It will say things like, buy the euro every day at 5:05 p.m. New York time. Like that's what it'll, you know what I mean? It'll come up with super, super simple systems. Or, if the market goes up 2 days or 3 days in a row on the daily candle, sell on the fourth day. It's like really super simple. So I am more attracted to those things. And a lot of traders, it doesn't make sense, or they just can't believe it. It's too simple. But if you look at like the automated futures traders, they have like 20 of those strategies that are simple like that. Like, a candle one daily candle goes up more than the average true range, and then the next day goes down 25% or less, and then you buy, or you know what I mean? They're really simple strategies like that. So if I were looking for an automated system, I would want it to kind of fit that template, because I would be concerned that all of the data that I'm being shown to show that this really works is actually wrong, because I'm looking at curve fitted data, right? So that's my take on it. So what do you have you looked into it? I know you in the past you have, right? Like you've looked into trading systems that are automated.
Yeah.
I know you in the
Actually,
past.
back in the day, I did a challenge where I bought one of those trading robots and I traded it for a little bit, made a few bucks, but in the end, I think number one, if you don't know how the system works, you're not going to have the faith to keep trading it, because you don't know how it works. So you can't tweak it, or you can't adjust the system at all. So I think that's a huge downfall. But on the upside, I think I've been playing around with it a little bit this week, and that's the only reason I asked. But I think on the upside, you can get some really good trading ideas. And if you want to test out the MetaTrader ones, even the paid ones, you can download them and test them for free. So what you do is you turn on the chart visualization, you run the back test, and then you can see the chart moving, and then you can kind of figure out what the thing is doing, right? And then based on the results with that might give you some ideas. I think it's useful for that. The biggest issue that I've seen, aside from you not having faith in it, is the spread. A lot of them won't factor in the spread correctly. So like I was looking at this one just before the call, and it's trading during the start of the session, right? The start of the trading day. And that's when
interbank.
Yeah, the interbank. Yeah. And that's when the spreads get really wide, and the system is not taking that into account. So it has a straight up profit graph, but it's not doing that. And when you set the spread to a really wide spread, like 10 pips or something like that, then the system blows up. So I think that, that's one way to check things. And I think that, like you said, there could be stuff that works out there, and it's probably really simple stuff, but always check, always try to break it, always try to figure out, okay, what am I missing here, right? And then if you get something that seems to work, then put it in demo. But I think that the best automated strategies are going to be the ones that you create yourself based on some sort of manual strategy.
Yeah, you'll stick with those. That's right. Yeah. Like that's the kind of thing that you want to like you'll end up trading for a while. Yeah. It's interesting that you said the interbank period, because I've seen more than a few automated strategies that key off the interbank period. And it's really interesting because it becomes, like you say, it becomes really critical, the spread then, because it can widen quite a bit depending on the broker, and it should widen if it's in the pair. Yeah. So there are a lot of, and the other time that I've seen, so interbank is one, and the other one is right before the Wednesday swap is paid, because it's triple interest is paid. So there's a lot of stuff that goes along around then too. It's kind of like in futures, like right at expiry with the futures contracts. There's a lot of things that happen, that day, or late,
like triple witching or something like that.
Yeah, so those are some ideas for people if you want to go down that road, like interbank period right before the triple interest, all the end of the week is another one, sort of like 4 p.m. to 5 p.m. New York time on Fridays. Like there's lots of interesting little things that you can find, patterns that you can find, and you can take advantage if you want to, if you wanted to automate it. So yeah. And the other thing that really turned me off, I remember I was talking to some people about automated strategies, and it was interesting. It was I did a talk it was when my book came out and I did a talk for a bunch of traders, right? And then afterwards they say, hey, come to dinner and stuff. So I came to dinner and I was sitting next to one guy and he wanted me to look at his astrology book, right? Like to edit it. I'm like, I'm sorry, man, I'm the wrong person, right? And then the other guy next to me wanted to talk about, trading robots. And he was talking about how much money he had made with these trading robots. And I'm like, really? And he was explaining it to me. And he said, but it depends on like I have it loaded on one broker and it's done this amount, and I had it loaded on another broker, it's done this amount. Why is it so different? Like, what's going on? He's like, well, it depends on the broker. And that to me is a red flag, because obviously it's going to be different. Like, you're going to get a different feed because there is no centralized in currency trading. But what was interesting about it was, like, it was just accepted to him that would be the case, that you would. So I always thought that means that this is trading probably a lower time frame. And that's where I'm worried about spikes, gaps, slips, spread. That's when all of that becomes a really major impact. If he's saying that he's got major differences between the same EA loaded on different brokers. And I was like, that sounds really dodge, that sounds like we're working with lower time frames. So I was concerned about that. Like, I would be okay with the strategy doing something simple on a higher time frame, like, above 4 hours or something.
Yeah.
But if you're looking at really major differences, it's probably lower time frame that's going. And I think it traded the Euro Swiss. So there was some funny business going on there. So you can definitely, it's like gaming the system. There are traders that you will find at these signal places like signalstart.com. Signal Start was really cool because our friend Dennis, he was the number one ranked trader there for a while, right, at Signal Start. But then what ended up happening is all these guys would come and game the system. So they would come in with their little tiny accounts connected up to Signal Start. And the way Signal Start works is you can see all these different trading accounts and you can subscribe to them so that the trades are automatically copied on your account. You just pay a fee, and 30% of the fee goes to Signal Start. The other 70% goes to the trader who developed it and connected it. So anyway, you would go there and you would see legitimate traders like Dennis started to be hopped. They started falling down the ranks because these guys were gaming the system by opening up really tiny accounts, taking a trade that was a winner, and then they would, as that trade was in profit, they'd withdraw like half of the account, like take out. So then that just pumps up the percentage win, right? So instead of that $100 account making $20, that $100 account now which is 20%, obviously. If they withdrew money down to $50 now, what I mean, it's up 40% or whatever. So they were gaming the system, and that's still, last I checked, that was still kind of what was going on there. You'd get a lot of martingale systems and a lot of people gaming the system with the withdrawals. So that was too bad, because it was kind of cool to see the different traders and their different approaches and stuff, and how who was ranked in the top 10 and stuff like that. But now I think it's a bit of a mess. So yeah, what I'm saying is there are ways that you can create a system, especially an automated system, to show a really good track record. And it's, do you know what I mean? It's not really something you'd want to trade. So just be wary, very wary. And I think your advice of, demo trading is really good. Although, remember, demo servers are completely different. They're going to have, people will have gone through that, where trading on the live server versus the demo server, it's very different. You're going to get different results and all that. But yeah, so certainly, test it on demo, test it on a small live account if you got something that you like, for sure. Yeah.
And I also had the thought that a lot of these systems, like, they make a lot of money and then they just crash the entire account, right? So what you maybe could do is start with a small account, build it up, withdraw, and then wait for the crash. If it takes out your whole account, it only takes out a little bit of money. So that's something to look into too. But that's, a little bit more, you gotta have a stomach for that, I guess.
Yeah, I used to do that with a trader that I worked with. We would give him a small percentage of the money, and because we knew that that's how he traded. You know what I mean? Yeah. Like, it was awesome. It was awesome. He would kill it. He would kill it. He would kill it for like 30 days, and then boom, he would wipe out. And so, in fact, he set it up with his clients where they were withdrawing every day. Oh, wow. Because he knew it too. You know what I mean? Yeah. Like, it was, so it's kind of, you can do that. And like you say, you'll see a lot of those 45-degree angle equity curves, which are obviously they're martingale based. They got some sort of martingale element to them, and then they'll just collapse. So you can definitely do that. And it certainly is an approach to take. Like, You just have to be okay with that final loss. That's all.
Yeah.
So, like you say, if you keep withdrawing, it's not that big of a deal. It also means that you kind of cap your gains because you're always trading a $10,000 account. You're not trading a $150,000 account, right? So, but that's okay. You just keep boom, 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 just taking money out. Yeah.
Yeah. Okay, cool.
Yeah.
Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.